Yo guys, welcome back to Stock Talk Insider. Today I will be talking about what to watch in the coming week, what are the points to watch and what are the points that will be happening this week, and things I will be considering an important thing to watch. And so yeah, this is the portfolio at this point before Monday on August 11th. So yeah, let's get right into it and what the big things are to watch. So I put it all together. So in this video, we'll break down the top events to watch in the stock market this week, including key economic data, earnings reports, and some geopolitical factors that could move markets. Plus, we'll take a closer look at 6 stocks you should have on your radar: AMD, Amazon, e.l.f. Beauty, Honest Company, Shopify, and SoFi. Let's jump right into it. So those are all the companies I own as a stock. So yeah, let's go right into it. If you look at, I use Yahoo Finance. If you look at all of the titles, so all of the news titles, it's a lot to do about tariffs or things like rate cuts. So this week will be very important with rate cuts, purely because we have CPI on Tuesday this week. So going further into that is, let's start with the big picture, and that is the number one event this week is US inflation data, because that's one thing that's been a little bit uncertain, I would say, but not really going up. It's not really that inflation is going really up a lot. It's pretty good under control, but at this point it's a little bit going heated. Not that it is bad or something, it's still really good. It's going down year over year actually, but it's just a little bit that can improve. So this week on Tuesday, the CPI report for the US inflation data would be a very important one. If you also look further ahead to September, when we would normally have our rate cut from the Fed, so this is an important one, because this could be the last one we hear going into next month with the maybe the rate cut. So yeah, later in the week we'll also get more inflation numbers, the PPI report, less important as CPI, but still it is important, and fresh consumer sentiment data. Together these reports will shape market expectations for the Fed's September meeting, as said before. Now, beyond the numbers, geopolitics is in play. There are renewed concerns about tariffs on Chinese imports, potential trade negotiations or tensions, and even speculations about Trump and Putin meeting. That kind of uncertainty can make investors more cautious, especially in global exposed companies. And if we take all of those points, we will be putting them into what will happen probably with the coming stocks, if you look at all of those points. And so, yeah. And just a reminder, we're in August, historically a choppier month for stocks, so even strong earnings can be overshadowed by profit taking or macro concerns. Know that we are in a pretty nice bull market since we went down a lot in April. We only have been in a bull market since we've gone back up, and we've always looked up the all-time highs. But I've made a lot of cash free, so this is all of my cash free, 10,500 euro. Total account of 54,000, and this is the amount that is invested, 43,000. So yeah, that is the amount that is invested, and we want to go further than that, of course, but I am waiting on a pretty nice pullback on the market, on the whole market. So that's why I've been looking more into the macro data at this point, because I believe that around, maybe if we get the rate cuts, stocks will go up a little bit more, and will end nicely with a new all-time high. And probably after that, sentiment of wanting to go down would be too big. And then I think that the thing that would lift through the market is that the market will go down, because of the sentiment that they just want the market to go down, because of course everyone wants to buy stocks when the market is down. So the market in its whole is always logically looking for an answer or a reason to take the market down. And when they have this reason, like not really bad inflation, but a little bit higher than expected, it would already be enough with a heated market that is already at this, again, a new all-time high, and then it's just not much needed to take it down a lot. So yeah. This week is still busy. We have results from big tech, AI-focused companies, Ford with its next-generation EV platform, and several defense and cloud infrastructure firms. The tech rally powered by AI excitement has driven the S&P 500 and NASDAQ to all-time highs, but some analysts are warning that the market might need to take a breather and short consolidation period before the next mover higher. So while we could see some big single-day moves in stock after earnings, the broader indexes might trade sideways or even dip if the data spooks investors. So, alright, then we will go straight into stocks that I own, and we'll talk with a little sentence in where they go, probably this week or in its whole. So, AMD, that's the first one. As you see, we're pretty nice up year to date. AMD is still riding the AI wave. Investors are looking for updates on their data center GPU shipments, and now they plan to compete with Nvidia. And commentary on supply chain or next-gen chip launch should be a catalyst for this stock. But of course, the China news and all of the trade wars and the tariffs, those are the one things that take AMD easily down, or make it a bad day for AMD if some titles from newsletters come out surrounding those facts. So yeah, that's one thing. Then we have Amazon, also a little bit sideways here to date, actually a little bit down since the first month. But yeah, the e-commerce giant is steady, but the real growth driver right now is AWS. Their cloud division this week keep an eye out for any new AI services or partnerships that could help AWS accelerate again. So yeah, not much about Amazon. It's just steady investment always, but a little bit sideways in stock growth. So yeah, e.l.f. Beauty, it is down since the earnings last week, but again, it had a share price of $133. It went down a lot to 55 through April, of course, and then it went back up around those highs of the beginning of the year. Now it's actually a little bit back down, but I do think that going into the end of the year, maybe we get a little bit more clarity and deals on and through and about tariffs, that the stock might go up and maybe end around the same it went into this year, and it would be flat, or we end up 1% or 5% higher. But yeah, in its main cosmetics brand that's been killing it with social media marketing and influencer campaigns. They've been expanding internationally and into new product lines. The big question, can they maintain those explosive sales growth numbers? Those numbers were actually very good if you look at all of those tariffs, but again, the company would automatically do better if those tariffs and all of those uncertainties wouldn't be a thing. So yeah, I also have a personal video about e.l.f. Beauty which breaks it all perfectly down, why the stock went also a lot down through its earnings, while earnings actually were pretty good and a nice growth. But yeah, you have to look at the video, and then you can have a better look on where the company actually is. So on this company position, I actually opened this week because share price was lower than I wanted it to be actually. So I jumped in. The company has been doing very nice earnings. I have them with me actually because I wrote them down. Revenue of 93 million. If you know that their whole value of its stock is around 400 million. So if you know that they do a quarter of 93 million, and their whole, I don't know how you call it in English, but yeah, I have to make a video and I don't know it. If I put a video down, then I know it. So yeah, its company on stock market is worth 400 million. And they do 93.4 million each quarter, so that's pretty big. And they have a net income, of course, of 3.8 million, which is very nice. And it's just a clean sheet with gross margins of 40%, and I think that those margins will stay there for the coming years. One thing is that they might actually need to increase a little bit in its net income, maybe between 11 to 15%. It was now around 9% or something, I believe, but between 11 to 15% would be very nice. But of course, that's a thing about maturing with a company. If you mature more and more and more, your net income should also be maturing more and, well, growing in percentage. So yeah, that's one thing about Honest. And then, yeah, founded by Jessica Alba, the company focuses on clean, sustainable personal care products. The trend toward eco-friendly brands is strong, but margins are tight. Watch for guidance on cost control and expansion into new retail partners. But again, I just started a position with 200 quantities of Honest. They have Shopify, also a company I started investing in last week, but I was too late for buying the actual amount of shares I wanted. I had too few, and as I thought before, the company posted very nice earnings and they went up 20%, but I only had 10 shares while I wanted to buy around and between 30 to 40, maybe even 50 shares, which would have given me between 800 to 1100 euros in profit. But of course, we're happy with 200 euros when we thought one little bullish uptrend that day. So I'm sorry for not clicking through, but that's Shopify. And yeah, the e-commerce platform continues to innovate, rolling out AI tools for merchants and expanding it into cross-border commerce. The focus will be on whether these tools actually drive merchant sales, growth, and retention. They also have been working a lot with upcoming AI projects, of course, and yeah, expect them to grow their revenue 20% each quarter for years to come. So yeah, one of my more important companies right now is SoFi. It's a digital bank, personal finance platform. It's growing, it's lending, investing in banking products, with interest rates still relatively high. Their net interest income could be strong, but the market will be watching loan default trends closely. One that's very harsh in reacting to things like inflation and just the rates, of course, and the rent. So that's one thing. So to wrap things up, this week is all about the macro meeting the micro. The macro being inflation, Fed policy, and geopolitical risks. The micro being specific earnings reports and sector trends, from AI chips to beauty brands. If CPI surprises the upside, we could see a short-term dip into growth stocks. But if inflation is cooler than expected, then we could add fuel to the rally we've seen this summer, and probably will be getting the rate cut this September of around 25 basis points, I think. Either way, it's a week where you'll want to watch both the headlines and the charts. If you enjoyed this breakdown, hit the like button, subscribe for more market insights, and let me know in the comments which of these 6 stocks you're most interested in this week. Thanks for watching, and I'll see you in the next one. Bye.